Are you tired of the emotional ups and downs of day trading? Well, if you're like me, this just might be the only trading strategy you need in 2026. Oh no, you are not alone. And check out the free how-to guide on the front page of spytomorrow.com. No email required, just download it. SPY is an ETF, an exchange-traded fund that traders like to trade. And the reason for that is that it's highly liquid and you're less likely to get stuck in it. You can easily buy and sell it, and that includes the options. Let's face it, trading is not easy, and less than 10% of day traders actually make money consistently. So if you're looking for a high risk, high reward style of trading that perhaps has better odds than day trading, overnight swing trading is an excellent option. It's been well studied, and failure among traders is often caused by emotion, keeping your emotions in check. And the ups and downs of day trading certainly can trigger an emotional reaction. So if we can lower the number of trades but still have a high risk, high reward style of trading, well then overnight swing trading with one trade is a pretty good answer. What I'm talking about is the overnight gap. You've seen it. The market closes at one point at the end of the trading day and opens up either up or down the next morning. And I prefer that style of trading over the ups and downs throughout the day. Plus, I get my time back. I appreciate that freedom, but still giving me the opportunity to follow the market and benefit from big moves. Again, one trade, less emotion, and more of my time back. And our approach is using options, except we never set up trades in which we could end up losing more than we put into the market. It's a numbers game, and it is high risk, high reward, and we are trying to go where the action is. Take a look at this chart. If you had bought SPY in the morning and sold it in the evening every trading day since it was founded in 1993, well, you'd be up a little bit or maybe break even. However, if you had bought at the end of the trading day and sold in the morning, well, you could be up over 1,000%. And that tells me the action is overnight. Now look again at that chart, and it represents only winning or gaining when the market goes up. That leads to the question, what if? During that time frame, the market went up about an average of 54% of the time. So what if you could do better than 55% of the time? Now here's the secret. You may not even have to be correct 50 or 55% of the time. It all depends on your win rate, and you should figure that out. I actually have a video on that. It's worth your time, so you can figure out what your win rate is. Mine is currently 46%, is what I need. That's not how often I win. That's what I need to be profitable. There's a big difference. Because I trade in an aggressive style of options, my gains are often over 100%, and my losses can't be more than 100%. So my average loss is about 50% per trade, and that's not my entire account. It's based off of the position size I put into the market overnight, and my average gain is around 65, 70. If you put in all the outliers, the huge big wins, it averages 75%. So that means if you work it all out, I only have to be correct 46, 47, 48% of the time. Fortunately, with my pressure signal, it's generally way more accurate than 50-50. I like to amplify the overnight gap with options. Now, options are not for everyone. So some people trade stock overnight or ETFs or leveraged ETFs. But even if you do want to trade options, you can consider your position size as your control lever, or you could consider the date until expiration. If you go further out, it's a much more conservative trade than if you were closer to expiration, such as 2, 3, or 4 days. So what do you do at the end of the trading day? Do you point your trade up or down? Well, that's what I've been spending the last number of years working on. I've been developing algorithms over at spytomorrow.com to measure what I like to refer to as the pressure at the end of the trading day. I like to look at it this way. There are people with a lot more money and quite possibly more information than you and I have, who are preparing at the end of the trading day for the next morning's open. And if we can figure out where that pressure lies, well, we can take advantage of that opportunity. But it's still important for you to keep an eye out on what could happen overnight in terms of, say, earnings or possible news throughout the night, or maybe government reports the next morning. These are things that could flip the mood of the market if the big money happens to be wrong. I'm always testing and upgrading my algorithms, and currently we do use what we refer to as a gamma-aware approach. But we're always making updates, and if you're curious to how the algorithm is doing right now, because all algorithms, depending on the market, go in streaks, positive and negative. So if you want to see for free what's happening, I always have the last 20 pressure readings and results on the front page of SPY Tomorrow. Just look down near the bottom of the page. It's also important to have kind of that self-check-in. What is your risk tolerance? And what should be your position size based on that risk tolerance, and how will that affect the growth of your portfolio or even your losses? One thing you can do, I actually have a growth simulator over at SPY Tomorrow. Check those out and kind of play with the numbers and see what feels right for you. Are there more signals than just SPY Tomorrow? Absolutely. You don't have to use the free SPY Tomorrow signal. You can use any signal that works for you. And you may want to paper trade or test different signals, or use a combination of signals to help you determine how aggressive or conservative you wish to be in your overnight swing trade. Your overnight trade entry at 4 o'clock Eastern Time, well, yes, that's important, but even more important is the management of your trade as you exit the next morning. That makes all the difference. There are three parts to the trade, and that is the time. It's an overnight swing trade. And then is your signal. What signal are you going to use to point either up or down? And next is the type of trade. Are you using options? Are you using a hedge with the options? For example, I only hedge when we're in negative gamma. When we're in positive gamma, I just use smaller position sizes. These are things you'll have to develop over time, and of course, that's why I create these videos, to help you out. But you could consider ETFs, stock, leverage ETFs. There are a lot of ways in which you can take advantage of the overnight gap. I like overnight swing trading because I can take my high-risk portfolio, yes, a very designated portfolio for high-risk trading, and I don't have to stare at the screen. I don't have the emotional ups and downs, but I still can take advantage of the rewards that the market can offer. I'll see you in the next video.